Hello, everybody. Welcome back. So, everybody was waiting for the Friday session. We knew that Jerome Powell is coming out and he's going to speak at 7 a.m. Pacific Standard Time at the Jackson Hole Symposium. And as soon as he started talking, after 10 minutes, the market just crashed straight down 3.5% on the S&P 500. So, what did he say? Basically, he said he vows to whip inflation and he wants some pain is coming for the stock market and for the economy. So, in a 10-minute speech at the annual Jackson Hole Economic Symposium on Friday, Powell said returning the economy to price stability will take some time and will require bringing some pain to households and businesses, which he called the unfortunate cost of reducing inflation. So, he knows that inflation has to be brought down, and there were a lot of assumptions by the investors, that there's going to be a market pivot and everybody was looking for those kind of things in his speech, but none happened. What instead he said is he was clear that a failure by the Fed to return the economy to price stability would be worse. Powell referenced previous attempts by the Fed to bring down inflation and said history has taught the central bank that not acting quickly on prices will likely only mean a bigger hit to the labor market in the long run. And reversing courses too quickly would also backfire. This was basically the point that through all the investors who were thinking, oh, there's going to be a pivot very soon, meaning the interest rate policy, they're going to be less dovish and they'll, bring interest rate down and not just keep increasing. So this statement basically canceled their assumptions. So this implied that investor expectations that the central bank might soon start to pause or reverse course after a series of steep interest rate increases. The historical record cautions strongly against prematuring loosening policy, Powell said. So basically, they said, they're going to be data driven, but just 1 month of lower CPI doesn't mean they're going to stop with the interest rate hikes. They know they have to increase the interest rate and really bring down inflation. So they're probably going to wait for a couple more CPIs, maybe September and October. Both have to show that inflation is coming down. And most likely, the energy is bringing the inflation down, but the real problem is the food and the other things. So that will evolve, you know, month by month basis. And so currently the energy prices are going down, and that's the reason the CPI is coming lower. So yeah, so that was the highlight for the Friday session, and that's why the market tanked. If in case you didn't know. And so now we're going to get into stock market. We'll look at the S&P 500, VIX, and the other things. US 2 year, 10 years, so many things to go and talk about. We'll look at option chain as well in today's video. Um, so stay tuned for that. It's going to be a good one. Bye. Let's start with the VIX first. So where are we? Currently at 25, and there's very high chance that VIX could go up to 30. For those who don't know, VIX is basically a measure of the fear in the market or greed in the market. If VIX is well down below here around 20s or below 20, then we are usually not fearful. But if VIX is above 30, that means the market is very fearful. So you want to usually buy when the VIX is high, like in 30s. And if you lay over S&P 500 on the VIX, you will know that these are the key areas to buy with high risk reward, high reward opportunities. So currently 25, I expect VIX to basically go up all the way back to 30 or 35. Basically, stock market coming down, VIX going up. So that's very high chance. Let's look at the dollar index, DXY. I was telling you in the previous session that we may see a double top and the dollar could just fall. And Fed chair came out and he started talking, and the dollar was actually falling. It was going down and then immediately was bought back up. And now this is really bullish sign for the dollar index. So this is telling me dollar could make higher highs now, which means the stock market is going to fall further. Okay. So keep paying attention. There's no signals that dollar is falling now. Things have changed. So keep an eye on that. Let's look at the 2 year yield. 2 year basically didn't go too much. It only went up by 1%, but it's still topping. Okay, it's at its peak basically. So the 2 year just basically doesn't even go up, and even if it just keeps doing this, the market can still fall. But if it goes back down here, and if it breaks this, that's when we can be really bullish on the market. But right now, it doesn't feel like there's any chance to be bullish. Okay. So we'll see how the 2 year reacts in the future, especially around September Fed meeting. Well, let's look at the S&P 500 index and break it down. So there are key levels that you need to watch. One is 3,900. Okay. 3,900 is a key level, and then 3,700. Where are we currently? At 4041. In the previous video, I was mentioning two cases that could happen. Market would come down, go back up, come down. This would be a point of confluence. Why? 50 EMA, previous support, 38 fib, all at that 4070, 4080 level. The market would do this. That was very likely to happen if I saw the signs of like double bottom or something like that. Okay, did that any of that happen? No. Right? What did we say? Boom, boom, down. Right? It broke the key level just straight away, no problems. Okay, so if you remember from the previous video, I was also mentioning that this case could happen if the market goes up and it breaks this level. Then anything would just be a sell-off. We're gonna keep doing this. Okay, so currently, where are we? We have broken this key level, which I was paying attention to. So if you ask me, where are we currently? At this trend line. Okay, now I think this is what's gonna happen. And it may not happen the same way, but my prediction is we're gonna gap down and we're going to start going down, and probably we'll try to go back up. But now anything that's been going up, that's going to be a rip. Okay, sell the rip. So any market buy is going to be met with selling demand, right? And we're going to most likely come back to 3,900, and even 3,700 is a big likelihood. So now the key levels are 39 and 3,700, which I think very likely we're going to retest even this low back here. Okay, it may not go down and make another low. It very well could, but most likely we are retesting this previous low. Okay, so there's definitely high chance that we are retesting the lows again. So what am I doing? I'm going to be basically looking for shorting opportunities once we break this trend line. And the same thing we see on the Nasdaq as well. If you can see again, we have a nice trend line. We saw some tiny bit of buying there, but on the Monday session, if we go back up, I expect the market to sell off that rip. Okay, and we break this trend line easily. But this is such a beautiful setup. I love it. Sometimes I love Nasdaq, but usually you want to look at the S&P 500 because that gives you the right signals. Nasdaq is a weaker market, only has 100 companies, and it can easily give you false signals sometimes. So always look at the S&P 500. It's going to give you the right signals. So for the S&P 500, we think we should go down. But we'll see what happens on Monday session. But most likely we're looking bearish for the short term, not bullish anymore, because the structure doesn't tell us to be bullish. So we're just following the price action. So 3,900, 3,740, 50 is your key levels to watch for the upcoming weeks. So now let's look at the option chain. So let's look at the option chain for the next week. For the expiry 2nd of September, the max pain is around 419. We have a ton of puts sitting around 400 and 380. So 400 is really, it could act as a support, and 380 could act as support, but market could do this, go back down, and then spike back up. Okay, So if the Wall Street was to make maximum amount of money, they would push the market to 419. So basically come back up to this area. Okay. So we could fall and then we could come back up. I mean, we expect the market to come back down and then come back up, basically, right? We're expecting something like this to happen. That's what I'm expecting. It would make sense to me, okay? But if the market just goes this, that's very likely. Could we see something like this happen? Okay. The fear coming back to the market. It is very likely to happen. So if you see market just falling straight off, you can think about, do what you like, but you can get, buy some puts, which I expect to do if the market falls straight like this. Okay. Because definitely we lost the opportunity right here. Nobody knows what could have happened. So if the market goes back up, we can get some puts, or if the market just falls straight away, also put would be a good opportunity to make some money. All right, that's all for today's video, guys, and I hope you enjoyed it. If you do, consider like and subscribe, and that really helps me out. And I'll see you guys in the next one. Bye for now.